Mm-hmm.
And I believe that you guys are going to generate more than that most years. And so you should adjust your profit structure so that you guys make out like bandits and the shareholders are all super happy. And I think switching to an or will produce better vibes, for your shareholders, regardless of actual returns or profits. I think it's an ethical choice where they're going to be really happy the year that you get 34% and you're taking your cut without taking the 2% also.
When the initial survey came out, I think originally instead of 13% it had said the S&P 500, if I'm not mistaken, when the survey went out. Is that correct?
Cool.
Yes.
So I had made like an almost identical like feedback suggestion to Andrew because he sent it in my Discord with permission and asked for feedback, and I was just like, hey, like I think if you made it an either or, but maybe like made your cut if you beat the S&P 500 a little higher would make like something like that would probably give people the security of like, hey, if we're lagging the market, at least I'm not paying to lag the market that year.
The Kathy Wood effect.
But I understand, like, but he was like, well, that would be like a higher risk on the actual fund itself, which I get both sides of it for sure. But that was just like my initial reaction, like, hey, and I say this as a neutral person that doesn't meet the 200K and accredited requirements to be able to even participate yet at this time. Maybe in the future.
I have answers for all of this because I'll start with actually the last one and go to the other one because I have more to say about it. So on the S&P 500 one, there's actually a reason why we can't do that, or we shouldn't do that, because if we do it at the current size, it's very cost prohibitive. Why is it cost prohibitive? Because as a fund, you actually have to pay the franchise. So like, for example, you want to use the MSCI World Index as your comparative. You got to pay MSCI a lot of money.
Bullshit.
So that's going to increase our maintenance costs.
Yeah.
And then same thing with S&P Global. If you want to use the S&P 500 and use it as like your barometer of anything, the fixed annual fee cost goes up. It's basically, I looked at the prices. It will be equivalent to all the administrative costs we pay just to have that tracker. So we can basically do it this way, or we thought about it this way. Our investor base, who we're getting capital from, they're intelligent enough to know what the S&P 500 returns. So we're going to have a fixed hurdle rate that is undetermined right now. We put 13% as the hurdle rate just to put that as like an introductory offer because we are thinking about the investors who start with us, they get some sort of reward naturally because they're taking on the leap of faith, so to speak. They're the startup investors. And so we're thinking, of course, when we finalize it, that it's going to be a much more attractive hurdle rate than what it will be in the future. So like when we have now recruiting investors for later funding rounds, and we already have, a year or two under our belt, those investors who come in later after everything's established and everything looks squeaky clean, they're going to get, something a bit still good, what we think, competitive, but maybe not as like juicy as the starting investors. And then because that in and of itself has to, in some ways be rewarded, like a thank you. Like, you guys believed in us from the get-go, boom, here you go. And then actually, yeah, exactly. Free channel memberships. On Blake's point, okay, you're going to love this because we've been having this debate between us for quite some time, and the or has been thrown out a lot. In fact, I'm one of the advocates within the group for the or. Then so we're still not finalized on it because I'm pushing for that or personally. But we're also asking, for example, and we might actually end up doing like a, a la carte menu for the starting investors. They can choose because we actually are able to do that. So we talked with our administrator. We can do what's called side letters. It's very common. Side letter is a deal for a specific entity, right? So let's say we get hypothetically like a very big sum of capital from someone, and they say, I want these terms. If it makes sense to us, we can do what's called a side letter. And then if you do, let's say at the beginning, at the start, you can basically offer a menu of fee structures, and you can say like, okay, if you put this amount with us in the beginning, this is what we'll offer. If you put this amount, this is what we'll offer. Or like an example of that, which we haven't finalized yet. But the OR has been floated around a ton, advocated by a good chunk of us. And I'm just going to just speak for myself. I've been advocating for that. But where there's been the pushback is we floated the idea to people who have experience as to far as raising capital. It seems like, for whatever reason, for yourselves, it's easy to market. I don't know why there's a difficulty in marketing the OR to, I don't know, investors who are more experienced in investing in hedge funds. I'm still trying to fully understand that myself, because I think the OR is simple. I think the OR is like, it's either or. It's like, if we pass this, we're going to go for the performance fees. And you say the higher of the two. So that way you mitigate your risk. Because you're absolutely right. It's when you're setting this up, you realize like at least in the very beginning, you have this like, there's these fixed costs every year, regardless. And it's not because like we're trying to, stuff ourselves with a salary. It's like there are fixed costs to keeping just it open and having an administrator handle everyone's account, keep track of everyone's performance.
You have to get a lawyer involved.
Yes, you have to get a lawyer involved. Like all these people cost money. You got to get a tax expert involved, right? So it's like boom, boom. And like I said, you want to add more cost to it. Yeah, you put an S&P 500 comparison, and yeah, you basically double your cost as soon as you do that, which is fine as when you're big. It's super fine. When you're like really large and you want to throw that, payment at it, which I'm actually learned also, it's also complex when you go back and change your benchmark. That's why these businesses are super sticky. The moment you include that as your benchmark, as MSCI Global Index, for the MSCI investors out there and who love that business, the moment you do that, as a fund, you're pretty much never going to change.